So volatility is picking up as the Omicron variant is starting to spread and enter to the U.S. So there's a lot of fear out there. So stick with me as we dive into what it can do to the market. My name is Brian Cannon, and welcome to Markets in 5. So I've got 4 charts I'm going to go through today, so I'm going to be a little bit quick, but just stick with me. This is the S&P 500. This is the channel trend we've talked about all year long, and again how it broke it, came back up, couldn't get into it and stay, and drop back down. So with this pull down here, you've seen the RSI start to roll over and certainly get into below the 50 mark, which is generally speaking not very good. We broke the 20-day moving average. We broke the 50-day moving average on Wednesday. So now we're looking at support on the 100-day moving average, and if that can't hold up, then we're going to be watching the 200-day moving average. But you've definitely seen this thing start to roll over. So we're watching these levels very closely. You've had the MACD roll over. Again, hasn't hit negative territory yet, which is good. But it's definitely trending that direction. So again, watching it very closely. Now on this chart, this is one we've gone through a couple of times in the past, but essentially it's a chart looking at the high yield bond market relative to the S&P 500. And generally speaking, when the high yield bonds begin to outperform the S&P 500, it's been a nice little clue historically to that's preceded a little pullback. So when we look at where we're at now, the high yield market is rolling over, and the S&P of course is rolling over as well. But we've got some pretty major support here from a channel trend perspective. So we'll see if that holds up. And we also have not seen the breakout yet in the relative performance, for high yield. It's lipping up and looking like it's going that direction, but it's not there yet. So we're just a little bit early on this chart. Now, when we look at the NASDAQ, very similar to the S&P. So you've had the RSI dropping down, certainly hit below that 50 mark, which again is not very positive. The short-term trend is broken to the downside, so we're watching that very closely. So we've got a level of support here at the prior high, but we've lost the 20-day, and so I'd say that prior high is going to correlate right there with the 50-day moving average, and if that doesn't hold up, then you can assume that we're going to come down and test this 100-day moving average, which this year has held up pretty consistently. So if we can't hold that 100-day moving average, then you have to assume that it's going to come down and hit that 200-day moving average. So we're watching that very closely. And then again, you've had the death cross here on the MACD as well. Still positive, but trending in a negative fashion. All right, the last chart here is a study of the VIX, which is the volatility index relative to the S&P 500. Essentially, when the VIX is up, and it means that the fear is up, and the S&P is generally down. But when those two become correlated, in other words, the S&P is high and the VIX is high, that's usually a sign that historically over the last couple of years has led to a pullback. And it could be a pullback of 5 or 6%, or it could be a major pullback like last year where it was peak to trough down 36%. So we're watching those levels very, very closely, but we did have a correlated VIX SP signal, and then also the VIX is breaking out to the upside. So we need to monitor that and make sure that that doesn't continue to go up. So in wrapping up, I think you can see that it's kind of a mixed bag at this point. It's a little too early to make a call as to whether this market's going to roll over or not, but we're definitely seeing a lot of warning signs from a technical standpoint. I think if you step back and look at the Omicron and what's happening, I think there's just a lot of fear out there right now. So the fear is as it enters the U.S., what will it do? And so, to the market last year when COVID hit, it was a 36%, peak to trough drop. And folks don't want to see that again. But then there's things that folks are looking at from a policy mandate, such as, reinstituting lockdowns or travel restrictions, or what will my taxes be next year? Are they going to go up with all of this government spending? So maybe it makes sense to take profits this year. So this could be a good bit of profit taking at this point. I think the market just needed an excuse to take some profits off the table. So we'll see if it turns into something bigger. But then also, I think the big concern is, if the lockdowns come back, it's just going to further put pressure on the supply chain and certainly lead to more inflation. So there's a lot of things to be fearful out there. You've got to watch this stuff very closely, and just know that we're doing that for you. We've raised a good bit of cash at this point, and we'll look to get it back in as soon as things look to clear up a little bit. My name is Brian Cannon, and we'll see you in the next Markets in 5.